Hello everyone, welcome to this new webinar. I'm doing a quick sound check and screen check. Can you see my mouse moving around screen? Can you reply in the chat box? Can you hear my voice? Yes, perfect. Welcome everyone. Okay, great. Here we are. Okay, just a reminder, you can use the chat box to ask any questions, but make sure you are very specific as to the asset you are referring to and also the time frame, because one thing I can't do yet is reading your mind. So maybe in the future I will be able to do that, but so far haven't learned yet how to do it. So when you are referring to a chart, please be very specific as to the time frame and the area and the asset you are referring to, so I can try to replicate or locate what you are referring to. Okay, good. So we are going to start. And if you have any questions, it's now the time to do it, to ask them. I've got a few charts prepared here with some scenarios that have been asked in the community. But if you have any specific questions, a scenario or time frame asset you want to solve doubts about, then just tell me about it. So I'm going to start first of all with the pound sec. Can you see my screen? Troy, Daniel, Brian, Jay, those that wrote any message? Yes? Okay, good. So here we're going to start with this, and then from here I'm sure that some questions I'm going to come up with doubts that you have and all that. So we're going to start with this. We have here on the pound sec, we have a clear uptrend with an area of supply eliminated. So in order, we defined for some of you this will be pretty basic, but it's always a good thing to remind. But for others, newbies and all that, it's just great to know. So here we have an area of supply eliminated, not here, not there, was tested, used up, and then eliminated by a very strong area of demand made of two ERC candles, 1 and 2. So after doing that, we can tell that there is an uptrend. If we score the level, the monthly area of demand, can anybody tell me if you would score high or low of this level? What do we need at least in order to validate a level as high probability? What? Not now, Venu, we just started. I'm just trying to go over all this, okay? Unless you have a specific questions, then I will make you presenter. Okay, we need, for high probability, we need two ERCs. Consolidation away has to happen as well. We just can't have something like that. If we take a look at this, here, we have a rally base trying to rally, and what happens here? There's no consolidation away. So in this bullish impulse trend, even made a higher high and then reversed instantly, then we would probably have areas of demand nested down there. But after a very strong impulse made of two ERC candles that also made a 2-to-1 imbalance, because if I duplicate this rectangle with the control key, dragging it, then we have that the width of this imbalance that we can use the engulfing pattern to draw it. From the proximal line would be right at the open and the distal right at the lowest low. So we duplicate it and we have twice the distance between the proximal and the distal line. So we have a 2-to-1 imbalance. We have two ERC candles closing at 80% or higher of the candle range, meaning by the candle range, the distance between the high and the low. So if this is the high and this is the low, the close is higher than 80%. Those are the highest probability setups. So here we have also another one. We have 1, 2, 3 ERC candles. In this one we have two wider candles than these ones. Okay, make sense of this? This is what we need, ideally. Okay, then as we also know, each time frame and each asset has its own personality. Some assets, in this case pound versus the Swedish krona, has a certain way of moving, and the imbalances are created in such a way that you will be able, some imbalances in this particular forex cross pair might look weak, to say an example, on this asset, but they could be strong on other assets that don't have so much volatility or liquidity. So you have to learn to interpret and locate and assess and study how price moves in every time frame and asset so that you can understand and score these imbalances appropriately. Okay, so here we have a monthly uptrend, demand created, scoring high, consolidation away, fresh level 2-to-1 imbalance with the trend. So are we allowed to set and forget here or not? Just asking. Month is in an uptrend. Yes, correct. Yay. Month is in an uptrend. Monthly demand in control. If there is some nested areas of demand on your entry time frame, the daily or the weekly, then we can go long, set and forget. If the nested levels do not score high by having a wiki basing structure, the imbalances are not scoring high because they are not made of 2 or more ESC candles. There's a lot of trading in the base. The departure is not that great and all that. Then we have to wait for confirmation. Okay, so that's the way. So let's take a look at one time frame lower. We have the weekly. So as you can see here, let me look at that. Okay, remember this bullish impulse that did not consolidate away. There we have it. Okay, so price just dropped, ignored this rally over there, ignored this bullish impulse, and kept on dropping. So this is one of the most important rules in the strategy. We need consolidation away. So after a very strong impulse, we are waiting, expecting price to retrace to the origin of the move. So we are allowed to trade at the interchange zone if there is a weekly area of demand there, and there was, okay, but it was tested already. Follow me? Are you following me? Okay, here, this is the interchange zone. So these little wick, the upper and lower wick, usually tells us if they are small enough that there is a CP in the middle. So this one trade over there, we were talking in the committee about going long there, and price retraced to the proximal line and rally from there and strongly. Okay, but since this was tested already and the bullish impulse on the weekly, on the monthly, sorry, did not consolidate away, and it was happening in the context of a very strong rally made of 2 ESC candles, then we are expecting a bigger retracement to the origin of the move. And not only that, hello, Gopi, welcome. So what does this price action on the monthly tell us? Anybody? There's a lesson that covers that kind of price action after a strong rally in price. No, I mean, yeah, obviously there is a bullish impulse, but this bearish engulfing pattern, what is telling us? Yeah, the engulfing lights lesson. So does that lesson make sense? That's the engulfing patterns creation after a very strong rally or drop makes sense that this is signaling the end of the bullish move, and it is telling us that price is most likely, and this is very important, quote unquote, most likely doing this, going to the origin of the move. If the origin of the move is made of a strong imbalance, which it is, scoring high, and it is trending up, then we are allowed to set and forget. In this case, we are allowed to set and forget. So if we were using the weekly time frame in order to go long, this is what we have. We have this area of demand here on the weekly. So can you tell me if this level scores high or does it score low? We have consolidation away. All this is the consolidation away. Okay, all that is consolidation away. What about the impulse? Is this strong enough? 2 or more ESC candles, 2-to-1 imbalance? Very strong. So if you were trading monthly, weekly sequence with 3 months as well, would you be able to go long here? Remember, the month is in an uptrend. Okay, so you would be able to go long there. So this is a set and forget type of level. If this level, so now imagine that this level here is the one that we have down there. Would you be able to set and forget longs, even though this is a monthly area of demand? Imagine this one over there, right there. Would you be able to set and forget? Nope, you wouldn't, because this level wouldn't score high. And also, this level would be tested. So if we place, we copy, we have to use a little bit of our imagination. Just don't have Photoshop here to do it. So imagine you copy and paste that structure right there. We would have a weekly area of demand tested already, so we wouldn't be able to test to set and forget. But in this case, we have a clear nested level weekly area of demand. This weekly area of demand down there, look where it is, right there. Okay, look at the crosshair. I'm going to reply to you now, Anil. Okay, I'm going to read your message. I'm just trying to finalize this. So here we have a very strong area of demand on the weekly, nested within the monthly, so we could use this level to set and forget. And what happened there? That price fell short of retracing to that level and engulfed. And what can you tell me about this price action here on the weekly? Right there. What can you tell me about this? Anil? Or anybody? Getting weak, compressed. Yeah, so here, look at this. This is a drop, base, drop, base, drop. Okay, is there any area of supply here? It is a balance. Okay, there is, yes, correct. There is no area of supply. So is this bearish impulse on the weekly right there responsible for eliminating any demand area here in the left? It is not. This, or did this bearish impulse consolidate away? No, it didn't. No. So not only did this impulse not consolidate away, but it didn't remove anything here on the left. The closest area of demand is here, and it didn't even touch it. Okay, so this bearish impulse is just that, a bearish impulse. Why is this happening? Why is this bearish impulse not strong enough to consolidate away? Why is that happening? What is one of the reasons why this could be happening? Why is that happening on the weekly? Exactly, Daniel. High time frame area of demand, monthly demand in control, and in a trend. So we have monthly area of demand there in control in an uptrend. So that's why when price reaches that monthly area of demand, we can see how the weekly is getting weaker and weaker, losing steam, stalling a little bit there, 50% candles, closing, faking out, and rallying, and then we've got this hammer of these monthly area of demand. And then suddenly we have a bullish engulfing pattern. What happened here on the bearish engulfing pattern on the monthly? It happened that it signaled the end of the move, and it went to the orange of the move. And now we've got these on the weekly. Do we have room to go all the way up? Yes, we do. This price action on the weekly is very, very poor. So we are expecting price to do this. Will it do it like that in 2-3 weeks? I don't think so. Price will do that, probably. We just don't know. Okay? But we are seeing new levels of demand on the lower time frames. Make sense of this? So when price approaches to a bigger time frame area of demand or supply, and it is in an uptrend, and we start seeing movements, price action with compression, no consolidation away on the lower time frames. Weekly is a lower time frame if you compare it with the monthly and the 3 months. Okay, so this is telling you that longs are going to be even higher probability because the bearish impulses are not becoming demand, eliminating opposing areas, and there is compression on the lower time frames. As you can see here on the daily, this is very bad price action. So there's a lot of room for price to rally over there. That doesn't mean that you're going to be buying breakouts and all that. You have to wait for the retracements. It happened here, it didn't happen there. Okay, so let me read the questions here now. Brian Wenner, so as of the weekly, daily, 4-hour trader, when price stops in no man's land, it's time to look to monthly for guidance? Yes. You must be looking, I always advise to look at one time frame higher always to see the bigger picture of your bigger picture. It's like driving a car. You're just driving and it's a little bit foggy. You just have to turn the fog light on to see what is ahead of me. So you have to know where the biggest imbalance or the obstacle is. And even if you are not looking at the monthly chart, you will see that even if you are a weekly, daily, 4-hour, weekly sequence trader, then what do we have here? Isn't this, Brian, too low to go long? Short, sorry. Isn't it too close to the weekly area of demand, Brian? Or anyone? So even if you are trading the weekly sequence without paying attention to the monthly, and like I said, I encourage everyone to look at the bigger time frame of one bigger time frame than the bigger time frame of sequence. But even if you are not looking at it, this price is being dropping for a long time. It's losing steam and it is very low in the range. Maybe on another broker you will be able to draw the level like this. Depending on the broker, you will have different price action there, but it's definitely too low in the range. Okay. Troy, situations like that, we can take longs when daily demand is created on the daily after the weekly supply removal since you don't need. Remember the rules, Troy. If the top time frame of your sequence is in an uptrend and it is fresh, we don't need the opposing area to be eliminated. Just a brand new area of demand. In this case, opposing area of demand was eliminated over there, was tested, weak. But you just need a new level. Imagine that this level was not eliminated, but the level was created there. You don't need the opposing level to be eliminated because it is uptrending, the top time frame of your sequence uptrending, and it is fresh. If it was tested, we need the opposing area eliminated. If it was used up, we need an uptrend, which we already have. Make sense, everyone? Those are the rules. Fresh, uptrending, no opposing area eliminated. Tested, uptrending, opposing area needed to be eliminated. Tested, used up, opposing area eliminated, two valleys equals to an uptrend. We need an uptrend. Make sense? All good? Those are the rules. So let me go back and read what Brian O'Neill said. I do not understand the consolidation away on the 1 month time frame after the break of the supply zone. Yes, here. O'Neill. Does this impulse consolidate away after breaking the area of supply? Anybody? It doesn't. In order to have consolidation away, we would have needed a candlestick like that. And that didn't happen. It just rallied and dropped strongly. So there is no consolidation away. So lower time frame areas of demand nested within that bullish impulse are negated. But it has to cross a trend line. I don't understand what you are talking about, Anil. It didn't cross any trend line here. The area of supply eliminated, but this area of demand, rally base rally, it didn't remove anything, so this is not demand, and it didn't, even if it had rally and consolidated away, it wouldn't have eliminated any area of supply. So it doesn't have to cross any trend line. I don't know what you are referring to with that. Yes, and it happened. Yeah, in order to create a new zone, it has to break a trend lines or opposing zone. Opposing zone eliminated, demand created. This one here didn't remove anything here on the left, and it didn't break any area, any trend line. So this cannot be an area of demand. This cannot be an imbalance. The imbalance happens down there. And it didn't consolidate away and lots of things. Okay? Those are the rules. Okay. Why are we talking about consolidation away there? Because if price would have continued to rally and we get consolidation away, it would have continued, probably eliminating that area, then this would have become an area of demand. So if we have a rally-based rally and the impulse is not strong enough to consolidate away, then whatever we have within this area here is negated. Those are the rules. Impulse with no consolidation away, it means no imbalance. So here the same thing, rallied, dropped, nothing, consolidation wave happened there, consolidation wave happened here, okay? consolidation where happened there, it becomes an area tested, used up, eliminated. Okay, so let me read other questions. Okay, Troy, I just learned something new. I was going to rate a weekly interchange zone on the pound sec, but the ITF, what does it mean? Troy, that's a new acronym. Ideally, how has to have 2 or more consecutive years is correct. I don't know what you're talking about. You are referring to the which one? I don't know. Yeah, interchange zone. But which one are you referring to? The weekly interchange zone here. But we want it. That's obviously an interchange zone over there. But we are referring the interchange zones where we are going to find CPs are those that have very little upper and lower wicks. We have very long wicks. That means there are valleys, as you can see here on the 1 time frame lower. On the monthly, that one over there, okay, the interchange zone is right there. Or there. One sec. Right there. And it was tested. So that would have been an area where we could have waited for any new areas of demand to go along. And then after a strong rally, we see the price returns. And if you are pay attention to this chart, as you can see, there is a bullish engulfing pattern, bullish candle, and then before the month ends, okay, way before, you can see that the candle, the bearish candle, is stronger than the bullish candle. So this is telling you, hey, no matter what, I'm not trading this one. Make sense? Is that okay? Good. So now this area of supply here is responsible for eliminating this area of demand, which in turn is responsible for eliminating that area of supply. So how would you score that area? Low or high? Low. So we are expecting that to be eliminated, isn't it? Expecting, not assuming. Very low probability. But as we all know, we need obstacles. The price does not move in straight lines. Okay, so we need obstacles, and obstacles, we need them for price to retrace. So this level is not scoring high, but it is what we need for the bigger retracement. Okay, I don't think price is going to continue to rally high. It could, obviously. Sometimes price just doesn't pause at all and then continues all the way up. But what I'm telling you is that what I'm trying to put forward is that in order to have demand triggered in an uptrend, we need obstacles above it for price to retrace. We need obstacles to have price rebounding off these obstacles and then retrace into our entries. Without obstacles, price wouldn't retrace. Make sense? That's how you have to look at these kind of levels. But it is a level of supply, and it was responsible for eliminating the opposing area. So this is just getting too high. We are waiting for a bigger retracement. Make sense? Stair step. That's stair step. And this also would go. This description you did, Brian, also will help O'Neill because he asked a few questions about stair step type of formation. This is here. Let me zoom in. We have a close, a low, lower close, lower low, lower close, lower low. This is the kind of formation we do not want our bases. We want this kind of formation, a rally, base, haramis, drop. Here we've got our morning star. Okay, we have a drop, 1, 2, 3, 4 spinning tops, and then price rallies. This is a morning star. So that's the kind of pattern that we want. We want engulfing patterns. We want haramis. We want dark cloud covers, piercing patterns, bullish and bearish. That's the kind of price action we want. We don't want stair-step formations. We don't want this either. And obviously we want consolidation away, and we want opposing area of imbalance eliminated. And that didn't happen. So all these, by reading price action, this is like, imagine that we could do this. Imagine that we had the possibility of erasing levels from the chart or price action. I would love that functionality on TradingView. So I mean, I don't want to see these candlesticks. Okay, why? Because I know it didn't consolidate away. So this is like, I'm just trying to explain what I always had in mind. Okay, so this price action is so bad that I'm not interested in seeing it on the charts. I would be interested in seeing this price action, this one over there, and this one that was responsible for this rally over there. So I would want on my chart this one, this one, this one, and that's it. That's what I want. So from here to up there, what I would see in Alfonso's personal chart would be, or trading platform, if I had the possibility to build one, is a bullish void to be filled. Make sense? Bullish void to be filled. Because this is so bad, I'm not interested in it. But there's no trading platform that allows me to clean or delete candlesticks or hide them. So I have to have them there. Okay? So, and if you take a look at one bigger time frame, the monthly, what is the monthly calling? I mean, what is craving it? What is the monthly time frame craving? What is telling us? It's telling us this. Price is going to rally all the way there. And what do we have at the top of the monthly bearish and confident pattern in the lower time frames? Yeah, O'Neill, that's a base as well. That's third step level. Supply on the weekly. So let's, yeah. So what do we have up there? Look at that. Right there at the extreme, we have a very strong area of supply made of a tight base, a strong departure, made of 3 ESC candles, which would have been great for counter trend shorts since we in a monthly sequence. Why? Because we would have had the middle time frame out of alignment. In a monthly sequence made of monthly, weekly, and daily, the middle time frame needs to be out of alignment for shorts. It would have been great to go short counter trend here because we had tested area of demand and fresh strong area of supply with a lot of room for price to retrace to the opposing area of demand on the weekly, nested at the monthly area of demand, with support of a bearish engulfing pattern on one time frame higher, which can be used as confluence. Make sense? All that. So you put together all that, and that gives you a counter trend there at when price was forming there. Okay, when that a level of supply was forming, not now. Now it is not possible to go counter trend. I'm talking about this. When price was doing exactly this, I'm going to use the replay functionality. Okay, when price was there, okay, then it could have been great to think of shorts there. Make sense? Is that making sense? So now let's switch to the monthly chart. If I do that, that's the monthly look. See, monthly demand is here, the uptrend, bearish engulfing pattern, tested demand on the weekly, bearish engulfing pattern on the weekly, monthly, and the weekly area supply right at the top. And that would have been great for a counter trend short. But now that price is right at the monthly area of demand and reacting to it, counter trend shorts are not possible. They need confirmation because the top time frame of your sequence, in this case we are analyzing the monthly sequence, we have monthly in an uptrend with monthly demand in control, bullish engulfing pattern on the monthly, on the weekly, very bad price action on the weekly, no consolidation away on the last bearish impulse. This is a base on yield. It is also the base seeing structure responsible for eliminating that weekly area of demand that was responsible for eliminating this weekly area of supply. Okay, so everything comes together once you put all these time frames and read price action and all that. So it would be great to have the possibility of hide this price action. What I'm trying to say here is that price has a lot of room to rally down there, right at the top, where confirmation will be needed for shorts. Make sense? That's a weekly wow right there. Exactly, yay. Weekly wow. I'm going to make it a little bit wider even. Single candlestick at the base. We can adjust the distal and proximal lines to the high and the low using the wicks. Make sense of this? So longs is the way to go. We have had areas of demand here, no retracement, another one there, no retracement, one there, retracement, one there, no retracement, and this price action is now getting a little bit tricky because why? We are approaching this weekly area of supply, and there's no consolidation away here and all that. It's tricky right now. Make sense all this? I've got all these charts, okay, to go over. I don't think we're going to have time to go all over them, but if you have any particular chart you want to look at, just tell me, okay, or scenario. But as we are going through this chart, I'm sure you're going to be asking questions and solving all the doubts that you have on the strategies. So let me take a look at, for example, a clearer setup here. MACD index, okay? What do we have in the monthly? We have a monthly uptrend, monthly demand area in control. So monthly uptrend, longs at monthly area of demand. Again, the ubiquitous, it's everywhere. What do we have there, O'Neill or anyone? Venu, you are trading Indian stocks and indexes. What do we have? What kind of structure is there? Is this high probability or not? What can you tell me about this, O'Neill? Jay, yes, no consolidation away. So bullish impulse, rally base, drop rally. It did not consolidate away. So no consolidation away. Imbalances in lower time frames than the monthly are negated. Make sense? Poor structure as well. Negated. Can levels of demand nested on the weekly and the daily there play out nicely and give you a lot of reward? Of course they can. Of course that could be, and then you could see another stock or forex cross pair where we had price doing this right there. There's a weekly average amount over there, and then price rally strongly. But that's not a high probability scenario. And if you've been trading this supply and demand strategy for some time, you will know by now. I mean, can you tell me the most two important rules or the most important rule not to ever break? Which is the most important rule you should not break? Exactly, Venu. Consolidation away. That is ubiquitous. So will there be times where nested lower time frame imbalances here, okay, play out nicely? Of course, not once, but many times across, I mean, over a period of months and years, there will be so many examples where price action within this area on weekly average demand nested within no consolidation away, they will play out nicely. But that's not what usually happens. And we should not be trading a set of exceptions. We should be trading a set of rules. Okay? So having price reacting like that and then rallying from this impulse is not what usually happens. So we are interested in scenarios that usually happen, the most common ones, the higher probability ones. So now that we are at a monthly area of demand with a monthly in an uptrend with a bullish ERC candle, single candle that is much wider than the average ERC candle, much wider, okay? This is way wider than the average candle, okay? So we want two ERC candles or more, like this one, or we want one ERC candle that is at least twice or more than two ERC candles of the average candle. Make sense, everyone? Those are the rules. But let me stress this is very important. I mean, we should be trading a set of rules and not a set of exceptions. Ignore them. Okay, so now we are very low in the range. Here, for some reason, I had drawn this level incorrectly in the weekly analysis. I had it like that. My mistake, because the level was like this. Correct me if I'm wrong, Venu. I think it was drawn like that. Like that. But it should be like that. I don't know why I did that. A mistake or I moved the level. I don't know. Whatever. reason it is that this correct level. Okay, we have 2, 3, 4, 5 candles at the base. And what can you tell me about the departure of this level? Anyone? There we have it again. Weekly strong area of demand made of 1 or 2 ESC candle closing at higher than 80% of the whole candle range. So my question is, monthly in an uptrend, monthly demand in control, and a strong nested area of demand on the weekly, can we set and forget this level? Yes, we can. That's the kind of level to set and forget. Okay? That's the kind of level we want to set and forget. So that's what we want. Now, if you miss the level, or this is too much risk for you because the distance from the proximal line to the distal line plus the padding that we are going to use on the stop loss, this may be a lot of risk in your personal account. So you either trade half of the level, okay, or a quarter of the level depending on your account, or you wait for new levels of demand. Make sense? You go to the lower time frame to look for new levels of demand, or to the lower time frames. Good? Make sense? O'Neill? Jay? That's it. So we had, let me do this. Let me draw a line here at the proximal line on the monthly area of demand. I will stick it to all charts. So we had monthly area of demand in control here. This is the daily chart. We were looking for areas of demand to go long. Okay? So that is an area of demand here. There was an area of supply here. That was eliminated by this area over here. So there was an area of demand there. So can we go, this is a confirmation type of trade. So can we go long at this area of demand on the daily? Too low in the range? Frederick says no. Brian, no. No. Why not? O'Neill, can we go long? It's a daily area of demand of a monthly area of demand in a very, in a clear uptrend. Why not? Exactly. There's a bad structure and all that. It's not strong, weak departure and everything. Okay, it played out for, I mean, it was like holding for 3, 4, 5 days, and then it shut down and it broke, creating an area of supply. So now my question again, can we go short at this area of supply? Why not? Exactly. Too close to the demand area on the monthly area demand in control. This red dashed line belongs to the monthly demand proximal line, monthly uptrend, monthly demand in control. So this is like an attack at the area, but it didn't break anything, neither the weekly nor the monthly areas of demand. So we are too low in the range. What can you tell me about weekly, the weekly price action? Anything that is supporting shorts or longs? What can you tell me? Anybody? Bearish engulfing. What else? But I'm referring to the weekly, Frederick, not daily demand zone. Oh, well, demand zone in control, yes. Okay, good. Sorry. Bearish engulfing pattern, but what can you tell me about this structure? It is the most important rule of all the rules. We've discussed it already in this session many times. Exactly, Miroslav, Brian, Benu. No consolidation away. And what is the no consolidation? Why is the no consolidation way happening exactly there? Why? Why didn't it happen there and it's happening there? There must be a reason. Exactly, Frederick and Jay. We have very strong area of demand on the weekly, nested within a monthly area of demand at least like this. So monthly demand in control, weekly demand in control, and monthly is in an uptrend. And that's why it's like a very, very thick brick wall there. Okay? Here, sorry, on the monthly and the weekly. And this is not strong enough, the bears, the supply in the lower time frames is not strong enough to the daily area supply we discussed here, right there, price could probably drop lower and even make a lower low. I mean, that could happen, obviously. But this area of supply on the daily is right too low in the range on the monthly, too low on the weekly, and it is nested within a bearish impulse on the weekly that did not consolidate away. So there are several reasons that negate this level. Okay, so we are waiting for new levels of demand to be created in order to go long. We are not allowed to go short. If you are trading the bigger imbalances, you should be long already there, or if you are using or having a smaller account, half of the level with the stop loss over there. And if you are trading options, long-term options, you could use, I'm not going to discuss options, okay, because we are not trading options in the community. Some of you are, but there are no lessons for that. But you could use long-term long calls or even long medium-term spreads, and you already be weekly spreads or month spreads to get some income by selling the calls or selling the puts, in this case selling puts. Okay, so if you know about options, you could already be going long and making money already on this one. This is a set and forget level on the weekly based on the week monthly sequence. Make sense? All good? Any questions about it? Okay, Troy, now wouldn't the daily demand has to be strong as well with the strong? Yes, it should be strong, but it is not strong yet. So nothing there. Okay, so simple but not easy. No, it's not easy, Brian. But once you do this, it's like everything in life, Brian. I mean, things are easy when you know how to do them. Okay, so how can things get easier and easier? Well, by repetition and practice. So you will get good at any craft or at work or any job that you do, even at relationships, if you do the things over and over, create habits and all that. So after doing this, I could analyze hundreds of stocks in very, very short time. Why? Because I've been doing this for a long time. I mean, trying to simplify everything, ignoring indicators and all that. I'm just interested in strong impulses. So let me tell you something. Many of you know that, and those that know me in person know that even better. So if I I can't do it. Why? Because I'm managing the community. But if I was trading alone, you wouldn't see a single area drawn in my chart. Only if I was trading alone and not supporting a community like the one that I am supporting now, Set and Forget, because people, if I don't draw this level, then why did you draw this level? Why did you draw it like that? Why is that a rectangle, hollow rectangle, and not an extended rectangle? Why didn't you draw this? Why did you draw it like that? Blah, 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 and all that. If I was trading along without having to support anyone on their progress and trading, this is what I would have. Nothing else on my chart. Why do I need anything else? This is the strongest imbalance nested on the monthly area of demand. Okay, I would have that on my charts. That's all I need. I don't need anything else. I don't need 20 EMA. I don't need anything. I just need this imbalance and that imbalance. I need to know that we are in an uptrend and this is a strong imbalance. That's all I need to know. But then if I draw the level, why didn't I draw the level? Why I did draw it like that? Why that? So I have to draw the levels because I can see the level there. Why did you draw it there? If Alfonso didn't draw it, it's because it is not valid. Well, I just try to make things as simple as possible, not having too many objects on my chart, because TradingView gets slower and slower the more levels or the more objects that you have on the chart. So here on the daily, I try to keep the levels lower, smaller than 1,000 total. Okay, otherwise it will start getting slower. Okay, so but if the cleaner you have the charts, the better. Okay, so any more question about this? So we are definitely long bias on this one. Okay, any more questions about this? So clean charts, and once you do that, I mean, you'll start getting a clear picture of what's going on here. Okay, so here, okay, good. So let's take a look now at another one. Okay, let's take a look, for example, at this one. Okay, because this one is a trade that has been called in the community recently, and it was also taken by one of the members. I don't know if other members took it. I think it was Kiwi Forex, Kelvin from Jakarta, Indonesia. I've had the pleasure to meet Kelvin in person 2 years ago in Tenerife. It was a great time over there. And we have Miroslav, can you say hi to my uncle Mato? He's no believer in the internet. He's a lamb roaster. A lamb roaster. Hello, Uncle Mato. Okay, good. So, what is the trend on the monthly? Again, you're welcome. Uptrending. This, even though it doesn't have the 50% candle, it is a 50% candle. I'm just trying to code another indicator, but it doesn't work as I expect. So it is basic candle. If I remove this one, and this is the classic one, let me show you this. I disable it and enable this one. You see, it's there. So this new indicator is, I don't think it's going to be possible to do what I want. It's trying to filter out the ERC, the failed ERC candles. And it does a very good job, but sometimes it also eliminates basic candles. That's the problem. So that's what we have, okay? Something happened there, one sec. Okay, good. There it is. So we have monthly area of demand, monthly area of supply here eliminated, so monthly demand in control. So what do we want to do? What is it that we have to do? Where can you see the chart with everyone interacting? I mean, you just can't write. I don't think there's an option with you can you read the questions or not? Anybody? I need to configure this. Maybe there's an option so you can see all that, but you can read what other people are writing or not? Brian, Benu, or just no? Okay. So I don't know. That should be an option. I will investigate it. Okay, for the next one next week because this is a new version. Maybe there's something that I have to. Okay. I will ask support. Okay. Okay. Good. So monthly uptrend, monthly demand in control, long bias. So what can you tell me about the weekly? This is the weekly chart. Okay. By the time price reached that weekly area of demand, what was the trend on the weekly? By the time, okay, was up, but by the time price reached that area, it eliminated one area of demand because this is all-time highs. Okay, this is the one responsible for breaking all-time highs. It did consolidate away by that candle, but does the level, or did the level score high? That one over there? No, it didn't score high. So people are, okay, blah, blah, blah. Okay, so we cannot set and forget. So no score high, no consolidation away. So this price action was very poor. So price reacted and dropped all the way down there to the weekly area of demand. Can you score this level? Does this level score the highest or not? Yes, it does. Highest. Great basing structure, 2 candles at the base, 1, 2 ERC candles, closing at 80% or more. Really great. And what about the location of that area of demand? Let me do this. Let me use this horizontal line, and I'm going to sync it to all the charts. That's the proximal line, and that's what, one sec, and that should be, come on, the proximal line, the distal line. Okay, so now we can see that this weekly area of demand, strong weekly area of demand, was nested within the monthly area of demand that goes from here, this is the proximal line, and this is the distal line. Out of all this price action over there, the strongest and the only level where you can set your trade and forget it is there, because here, okay, it's already tested and poor. So we are not interested in that. We're interested at the closest level on the monthly average demand, nested on the monthly average demand, and that scores high. So that is a level that we could have taken on the weekly. If it is too wide, you could, divide it in two and take the half of it, or look for nested levels on the daily. And the nested level on the daily was right there. So now, can you tell me, can you score this level of demand on the daily? It's high, isn't it? So what do we have here? We have monthly demand in control, nested, high probability, high score level of demand on the weekly, high score level on the daily. If you are trading the weekly time frame, then you should be long already. If you are trading the daily time, if you are using the daily time frame, then you missed the trade. Didn't you? You didn't. You missed the trade. Price is rallying without you. Okay? So this is a set and forget level. So if the level nested at the proximal line, either on the weekly or on the daily, is not good enough, it's not a 2-to-1, no 2 ESCs, bad basing structure, a lot of weekly candles, step formation and all that. If this level was like that, and also the daily or the daily, what would we need to do? What is the action to be taken when the nested imbalances are not scoring high? Exactly, Jay. Confirmation. We need new levels of demand in order to go long. We'll drill the area down to a smaller time frame created as a confirmation. What is a confirmation type of trade? A confirmation type of trade is a new impulse strong enough to consolidate away and break a trend line connecting the last two valleys and peaks, or three consecutive patterns, continuation patterns, or eliminating the opposing area of imbalance. So what can you tell me about this? Is this a confirmation type of trade? Do we have any on the daily? Yeah, O'Neill, it seems good. I mean, and this was mentioned in the community, and also Kiwi Forex, okay, mentioned about that, and he's long already there. He mentioned in the community, he posted the chart before the fact, and this chart is analyzed every week. On the weekly analysis, we were talking about going long on this particular index, on the Australian ASX 200 index. So longs and new areas of demand. I don't know if we're going to have time for that, Pier Paolo. Okay, the euro-pound weekly uptrend price approaching weekly area of demand, I know, but all the pound cross pairs are getting stronger, so it's not a good idea. On the monthly sequence, it's not allowed. On the weekly sequence, it is allowed. Okay, make sense, Pier Paolo? But luckily, I know all the charts by heart. I analyze them every single day, so I know what they are doing. So here we have daily while long off. So we take confirmation type of trades under several scenarios. First one is if the nested level or the level of demand of the top time frame or the middle or the lower time frame is not strong enough, doesn't score high. So we have to wait for new levels of demand. In this case, we have very strong level of demand on the monthly, weekly, and the daily. So we can set and forget on these levels. But if we are missing the level because we are trading the daily imbalances or even the 4-hour, it would be smaller, then we have to wait for new levels of demand. That's another scenario where we can start looking for confirmation. Confirmation is not the right word we should be using because it doesn't confirm anything. I mean, it could, okay, it's a bullish impulse and all that, but if we get this under a scenario where we are in a downtrend, then this wouldn't confirm anything because we are not allowed to do that, to go long with a monthly downtrend, monthly supply and control, weekly supply and control, and all that. So we're expecting that to be eliminated, but we have the opposing scenario here with a monthly uptrend and all that. Okay, so we have more evidence. Let's say, like Jay said now, this is evidence it's like the footprint of big investors trying to accumulate and place new trades over there in a monthly uptrend. Okay, so we have two ESC candles. The consolidation away happened. Yes, it did happen. The break as well there with that single candle. That is enough. If that candle wouldn't have happened, then we wouldn't have consolidation away. It has to stay away from the candle. It cannot touch neither the high, the open, the close, and the low can touch the trend line at all. This one, imagine this was like this. Let me go back in time and do that. This is not demand yet. Why? Because we don't have any candle closing fully above the trend line without touching it. Make sense? Jay, Pierre Paulo, O'Neill, everyone? That's Frederick. That's what we are. Remember, this is high probability. So maybe you are trading other strategies and it's looking for something else. People with indicators, maybe they were going to have the daily over sold and they will be looking for the cross of the EMAs on the lower time frames and over sold signal crossing the on the RSI and all that. I used to look at all that a few years ago. Then they will be looking to go long. But if you are an intraday trader or a swing trader and you are looking at the daily, what is the daily telling you to go to do? I mean, you are not trading this strategy. You don't know about the wows. You just see this. Look at that. And because many people are trading from their mobiles, okay, and they just see a few days, if they are looking at the daily chart, okay, because the daily chart is like, wow, too big. I'm trading the 50-minute charts and the 1 hour charts and the 5-minute charts and all that. Okay, so if you are looking at this, what do you think the bias will be for the retailers and people that are trading intraday and lower time frames? What do you think? Shown down, really. I mean, the 20 EMA, the 10 EMA, the 50 EMA probably is down cross the EMA are crosses, the MACD is bearish below. I know all those indicators. The MACD is like this. This is the zero line, the horizon line, the 20 EMA like that. It's like that, and then it goes down. MACD is crossed down below the horizon line, the zero line. So crossover here, indicators cross, blah, blah, blah. Short. Let's go short. You lose. Why? Because you are not aware of the context. You don't know what's going on. You're just looking at not at the forest, at the trees, not even at the trees, at the branches, not even at the branches. You're looking at the insects on the leaves on top of the branches. You don't even know what's going on. But then you zoom out. If you are flying a drone, for example, then you go out away from the forest of the tree, and then, wow, I am where I am. I'm not. I'm not doing that because I know where I am now. But if you're trading the lower time frames, you're not going to be able to see that. So if you are trading the lower time frames and you want still to trade the lower time frames, you could use this long-term analysis to plan your trades and have bigger reward risk on your trades because you know where these new impulses or new price action is being created. It's being created off bigger time frame areas of demand in an uptrend and in control. Make sense all that? You can trade whatever time frame you want. I'm just telling you that if you don't look at the big picture, you won't be knowing if you are trading against a big pool of demand there. Okay? So that's if it continues to rally, then we're going to have new areas of demand. That could happen because we are having here a new bearish, one sec, here, bearish trend line like that. We have a drop, rally, drop with a lower low. If it continues to rally, we could have another area of demand right there. Still a couple of days left, at least. So imagine that price does this. What do you think? How would you score that level? You have to project always to go think ahead what the market could be doing. Okay, so if that scenario happens, that's awesome to go long because we have monthly in an uptrend, monthly demand in control, weekly demand in control, too low in the weekly and monthly ranges, uptrend, long-term bias, new levels of demand being created. Okay, could price create a level, go down there, and then eliminate it? Of course it could. It could be a loss, of course. But would it be a valid trade? Yes, but a loss. Another one on your curriculum of the 1,000 losses you will have in your trading career. Okay, good. Okay, good. Perfect. So now let's take a look at another one. And because there was an unclear scenario, something I wanted to comment, as so many. So, for example, there was the Hans, it's not here, but the Hansen index is a more complex scenario. Hansen index, let me see, Hansen index, HSI, this one. This one is a more complex scenario, but it is also a scenario that is worth paying attention to. Okay, so this is a more complex scenario, and this trade has been called in the community as well, and a lot. So I'm gonna go over the reasons why. I think also Kelvin Forex took that one and will mention it. So what do we have on the monthly? What is the trend on the monthly? Out of alignment. Monthly area supply is in control after having overextension. Retrace over there and then drop into this bullish engulfing pattern that can be used as confluence, since monthly is consolidating and we can use bullish engulfing patterns as confluences to look for new areas of demand. Can we go long here if new areas of demand are created? That's all-time, that's here at the top is all-time highs. Brian. Okay? So that's the level, but we could merge both of them and draw it like that because this is the top of it. We're going to do like that. Okay? So that's all-time highs. So we can use this as confluence in order to go long. So now we go to the weekly time frame. And what do we have on the weekly time frame? What is the trend on the weekly time frame? Okay, yes, down. J, yeah, down with monthly demand in control. So now Frederick says something important. Monthly demand in control. All this is the monthly bullish engulfing pattern. So do you think it is a good idea to go short against a monthly bullish engulfing pattern and a weekly area of demand after such a strong bearish impulse? So what rules say, supply and demand rules say that when prices have been dropping for a long time, now the underlying asset is too cheap and we shouldn't be selling. We should be buying new asset. We should be selling here to get rid of our assets to get profit, to sell for profit. Now we should be buying to sell at the top for profit. Okay, so we are expecting a retracement to the origin of the move. Based on the engulfing pattern on the monthly and the weekly area of demand in control, we have to wait for new levels of demand. Okay, so weekly in a downtrend. Weekly is in a downtrend. Okay, weekly is the top time frame of our sequence now. What do we need in order to go counter trend long? Because we have a downtrend. What do we need in a weekly sequence in order to go counter trend long? Exactly, Daniel and Brian, O'Neill, and all that. The daily out of alignment. But in order to be more specific and more general in our assessment, if in our sequence made of the top time frame, the middle time frame, and the lower time frame, we need the middle time frame out of alignment. Okay, so in a weekly sequence, if we change these symbols here with the weekly, daily, and 4 hour, then we need the middle time frame daily out of alignment. We already have a bullish engulfing pattern as confluence as well. We have the weekly average mass confluence. We have the monthly bullish engulfing pattern as confluence. We have 1, 2, 3 confluences, don't we? All those confluences for longs. We also need the daily out of alignment. We have 4 confluences, 4 pluses for bullish or buying. Make sense? It's ideally we need compression to the left. We would also be great to have overextension on the daily, which we will probably have. Overextension is another enhancer. Okay, it helps if there is overextension. 3 or more ESC candles can also be considered overextension, because if we have 2 ESC candles, okay, and the interchange zone, we expect price to retrace to the middle time frame, to 1 time frame lower interchange zone. If we have 3, then the interchange zones are getting lower probability. We are expecting price to go to the origin of the move. If we get 1, 2, 3, 4 or more, you cannot trade the interchange zones, not even with 3. Make sense? If we have 3 ESCs on 1 time frame, there is almost for sure, or not always, overextension on 1 time frame lower. If we have this strong drop, the daily will be probably overextended. Make sense, Troy and everyone? Good? Okay. So we have a lot of confluences for longs. Okay. So if you are a counter trend trader, then you can go long at new levels of demand. So what about this? Look at that. We have drop base, drop base, drop base. Okay. Overextension. Not only that, we also have the supply eliminated. Can you score this level here? Look at the strength of the impulse. 1, 2, 3 ESC candles. That is the entry. Okay, this was mentioned in the weekly analysis, and I believe Kiwi Forex or somebody else also mentioned it. I don't know if he did take the trade or not, or somebody else. I know some people took that trade. So interchange zones are good for 2 ESCs. More than that, no, that's it. More than that, it's getting the. Remember that interchange zones, Troy, when you get 2 ESC candles, let me talk about this again. You got the wicks here. If they are small, probably they are CPs. But we could also have CPs in the middle of the candle on the daily. Okay, this is a weekly chart. Okay, so here we are going to have a daily CP, another daily CP, another daily CP. Probably in the middle here, depending on how strong the price moves during the week, 5 days in the week, we could have also pauses on the daily. So probably we're going to have overextension on the daily. Makes it so far so good, everyone? Okay, so by just looking at the chart on the week, on any time frame, when you see several ESC candles, by evaluating and analyzing the interchange zones, you can look obviously at 1 time frame lower, but you can read what is going on in the lower time frames by just reading the interchange zones on 1 time frame higher. If it is a very wide wick, then on the if this is a weekly, then on the daily we're gonna have a valley instead of this would be the drop here, and this small wick here could be the base, and this ESC would be the rally. Make sense? So that's how it would work. So if we have several ESC candles, and these the CPs created over there will create overextension. And remember the rules. The CPs are great at the beginning of the move. As they get lower and lower, with now weekly area supply here, monthly bullish engulfing pattern, as they get lower in the range, they are very low probability. So we want to trade low in the range. We want to trade strong peaks and imbalances as an aggressive trader. But CPs, they are very low probability. Okay, but we need them to be broken because if you look at the daily again, and you are trading, you are looking at this on your mobile because many people trade from their mobiles. Okay, what do you think the trend is? What would you be thinking on when price was there? I mean, look at that. Sec. Come on. It's not working. Why not? I don't know. So imagine this doesn't exist. Okay? What would you be thinking on if you are trading daily? Isn't daily the downtrend? Could you be thinking of going short around that area? You could be looking for maybe if you're using indicators, all the oscillators to be overbought and all that, and then going short. Most likely. But if you do analyze supply and demand as per supply and demand, we do analyze price action itself. What can you tell me about this price action, this basing area? But people, Troy is saying shorts, but yes, but it is overextended. Yeah, but people don't have these. Most traders don't know or don't analyze the charts as we do with overextension and continuation patterns and all that. So they probably overextension is. They know about overextension probably because they have an indicator telling them that it is oversold. That's it. Okay, but no by using price action as we do, imbalances and all that. So we are not interested in going short there. We're interested in going long, but we need that price overshot the level. Then all breakout traders probably are saying, oh yeah, I'm going to buy breakout. And then those are the buy orders that feed the sell orders. And then price drops down there. All these sell orders feed the buy orders from long-term investors and professionals. And this is the concept of the wow. So why the heck, if the daily has been dropping strongly and creating bearish impulses, now out of the blue we get the bullish impulse stronger than the bearish impulse? Why? So that's the signal that we want. We want that's new demand, removing opposing area. If price action good, if this was the level of supply and it hadn't been broken, okay, imagine this was the level, then we wouldn't be able to go long there, even if we had 3 ESC candles. Make sense? Good? Great. So that's another one, okay, I wanted to cover today. So as you can see, we are always talking about low in the range, consolidation away, and all that, very strong impulse, overextension. It's always the same. And here, this is more tricky price action here, but if we read price action here, we could come up with something here interesting, okay? We have drop, base, drop. Isn't it a CP? One CP? Okay. What about this one? Drop, base, drop, isn't it? Two CPs? Don't we have two CPs now? Two CPs. And what about this one? Here, drop base, another drop, base, drop. In order to have CPs, this is a more tricky price action. CPs require an ERC, leg out, ERC, basing, ERC. So we have ERC, basing, ERC, basing, ERC, basing, ERC. So don't we have 3 consecutive CPs? Yes? Yes, we do have. So we could do this. Connect the latest 3 CPs, and what do we get? What do we get now? A monthly area of demand. So now we have the support of monthly area of demand, weekly area of demand, daily area of demand as well. I'm going to remove that object. Okay. New area of demand created of all those confluences. And that's the reason why this trade is valid, the same way this one on the Australian index is valid. And it is the reason why this trade here is not yet valid. And also why this one is not valid, because it is a poor area of demand of the monthly area of demand. So if you were trading these only three assets, imagine the Bank Nifty, the Australian index, and the Hang Seng index, which of the three wouldn't you take? Which? We have three. Hang Seng index, because you have to be very selective, very picky. Okay? So one sec. Troy, but weekly has to be out of alignment in order to take wow long on the daily. Why does it weekly need to be out of alignment? I mean, weekly is in a downtrend. The daily is out of alignment. So in order to go counter trend long on the weekly, you need the middle time frame out of alignment. Is the middle time frame daily out of alignment? Yes. So you can take long. Make sense, Troy? If we get a monthly out of alignment, monthly area of demand in control, okay? But it is not downtrending. One thing is out of alignment and another thing is downtrending. If we have a downtrend, we need for counter trend the middle time frame out of alignment. On the weekly downtrend, middle time frame has to be out of alignment. If we had the monthly in a downtrend, then we would need the weekly out of alignment in the weekly sequence, in the monthly sequence. Makes sense? Makes sense, Troy? It depends on the sequence and the trend. If you're thinking of the monthly, weekly, daily, it is too low in the range. It's consolidating. In consolidation, we need new levels of demand on the entry time frame only. When we have a downtrend, we need the middle time frame out of alignment. Out of alignment. It's different. The trend is crucial. It hasn't, I mean, it hasn't had to do anything. I mean, the month a trend is different to consolidation. So there are different stages. So in consolidation, we look for new levels at the top at the top of the range. Levels in which time frame? In our entry time frame. It does not specify that we should have the middle time frame out of alignment. But if we are trading counter trend, and we wouldn't be trading, if we wouldn't be trading the monthly time frame, then in order to go counter trend long, we need a middle time frame out of alignment and obviously support of a bigger time frame. We just cannot imagine we don't have this monthly every month over there. We just shouldn't be looking to go long because we don't have the support of a bigger time frame. Okay? All good? Everyone? Yes? Good. Good, good. Perfect. So now let's take a look at another one. Price action. This one is good for price action. Okay, good. So here, what is, if you look at the Aussie dollar, thank you, Daniel. He's saying that it's a very good webinar. Thank you. If you look at the Aussie dollar, what is the trend on the monthly and weekly sequences? What is the bias on those sequences? Down, it's clear. Monthly downtrend, monthly supply created in control after eliminating this tested use up area of demand. We've got weekly area of demand created, and we have a weekly area of supply over there created. Weekly is in a downtrend. But what can you tell me now about this? Price action. It's a weak price action. Would you be daring to trade shorts within that area? It's not a good idea. Price could go up at any moment, probably. So it's not a good idea. It is clear that the strongest imbalances on the chart are there and more obvious up there. So if you are patient, and maybe it could take 2, 3, 4 more weeks. In the meantime, there are many other cross pairs and then stocks and futures and commodities and many assets. Okay, you can trade CFDs, which are less expensive than stocks themselves. So I just don't know why people just focus on forex when there are so many options. Okay, so if you are patient enough, yes, Gopi, we have the interchange zone over there. Okay, those little wicks are telling us that there should be what? on one time frame lower. This is the weekly. That should be a CP, correct, O'Neill and Jay and Frederick. Okay, a CP over there, which could have been great if price would have done like that, isn't it? And then from there, dropping. But let's take a look at the daily. Look at that. This could have been great. 2-3 ESC candles, pause. It would have been great for price to do that. And then, great. This is great as well. What can you tell me about this area of supply on the daily? Now it's overextended, so price is not good right now for shorts up there. By the time price gets up there, the daily trend line is something like that right now. Okay, as a low here, a lower low there. It doesn't need to print a lower low over there here. Okay, because we have a low here and another low there. So by the time price reaches that area of supply, what will be the trend on the daily? It will be out of alignment. So if the daily is out of alignment by the time price reaches up there, where would be, can we set and forget there? No, exactly. We can't set and forget. We can only set and forget at the weekly time frame. Do we have a great area of supply on the weekly time frame nested within on the daily? So look at that. Look at the top. Can you score this level of supply on the daily? It's made of 1, 2, 3, 4 ESC candles. Very strong. Okay. What about the weekly? Does it score high? Yes, it does. 2 ESC candles. So great. So we have a set and forget level, no matter what. Okay, right now. So here it requires confirmation. By the time price reaches that daily area of supply, we will probably have, not for sure, but probably we're going to have, if that happens, a weekly bullish engulfing pattern. So imagine that, a weekly bullish engulfing pattern. What do the engulfing light lessons say when we have an engulfing pattern after a strong decline in price? What does it say? Correct. It says that the end of the move has been reached and we are expecting a bigger retracement. So CPs will be lower probability. All this by just reading price action. Okay, so set and forget levels, shorts at the top. Now, when price reaches that area, you should be ready to set and forget. If obviously the trend is still down and aligned for shorts and all that, if price continues to drop and create another supply, and then the weekly is out of alignment, then we cannot set and forget at the weekly. Okay, we have to follow the realignment rules. Okay, but as per now, if we have price rallying there, this is a set and forget shorts. The same way it was a set and forget short on the MACD weekly area of demand, and also set and forget longs, set and forget longs on the other ones that we were talking about, on the pound tech and all that. Okay? So once you have, the thing here is that once you have 2 ESC candles, you should be looking to trade at the interchange zone if there is a level on the lower time frame there, strong enough. If you have 3 ESC candles, then wait for the origin of the move. Make sense? That's, to be safe, that's the highest probability. If you have 4, even more. And I could show you dozens and hundreds of examples on stocks and all that having a strong rally. We've been talking about Visa, MasterCard, Valero Energy, and Netflix, etc. So many of them. Very strong rally, bigger returns than expected, and it happened. It just happened. Like, for example, I don't know, the one that we were talking about the other day. Well, let's take a look, for example, at Netflix. Netflix on the 3-month chart. Strong rally, okay? Then price is going to retrace down there. So we take a look at Valero, I think Valero Energy. Okay, it did happen where? On the 6-month chart. After strong rally, decline. So it's ubiquitous. It's everywhere. Okay, everywhere. The rally on HSRY, on this one, on Hershey Company, Troy, look at that. Okay, so that's on the monthly. So this one hasn't retraced unless you are doing breakout trading and all that. This hasn't retraced, but okay, no problem. There are hundreds of stocks. So let's take a look at the 3-month chart here. So what is the 3-month chart telling us? Isn't there a great area of demand down there? Have you, any of you or all of you, are you paying attention to the external analysis, the video analysis, and also the stock channels, just for this, even if you are not trading stocks, for the sake of analysis and learning purposes? Are you reading the threads in the stocks? You will see how many, Troy, that you are reading, you are doing, saying that you are, how many stocks have been reacting to 3 months or 6 months areas of demand so clearly in the last months. How many? So many. So many. But when price reaches those areas of imbalance, then the market will be bearish, or everyone will be shorting, 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 shorting. And then those shorts will be the orders that the professional traders and institutional traders need to fill their buy orders, because you just cannot buy, I don't know, 200 or 300 million shares of Hershey if you don't have 3 million shares sold. Because in order to make that transaction, you need a balance between the buy orders and the sell orders. You need the same amount of sell orders and the buy orders in order to accomplish that. So how to do that? So price drops, they start buying in stacks, and then rallies, drops, engulfing, no consolidation away, makes a lower low, then the shorts keep on the short-term traders keep on selling. They buy another 20,000 shares or 100,000 shares. Then price rallies until it engulfs. It creates a wow on the daily, fresh trade on the daily wow. The rallies, retraces to the weekly area of supply. Imagine down there, that would be a weekly area of supply on the way down. Just imagine prices down there. Retraces, it creates a weekly wow long. Then the second trade is the weekly wow long, and then they fill another 300 or 1 million shares, and then again and again and again until they have purchased millions of shares, and then price takes off, and then all the retailers will think now, wow, now before it was bearish, now it's bullish, but we knew that is happening because we know how supply and demand works and how these impulses, new impulses, are stronger than the prior bearish impulses, and it creates wow trades and all that, and we just have to be patient. Okay. Jay saying, even in sleep you can analyze trades. The best ideas I've ever had, the wow and all that, and it happened while I was sleeping, and I'm not joking. But I always have my telephone in airplane mode with the Google Keep Notes there, and when I woke up, I used to test a lot and put down all my notes so I didn't forget when I woke up and tested them on Forex Tester. That's what I did. Okay. Now I don't do that anymore because I already have the rules that I want. I add a nuance here, a nuance there, but more or less it's all under control. Jay. So this is, what would you think about the 6 month now? Look at that. Wow. What do you think about that one? So on 6 months, we have a very strong area of demand. The interchange zone at the end of the year. We don't know if today was the 31st December 2019, we would have an area here, okay, an interchange zone, and if we do have a 3 months area of demand there being formed there, it would be great, but we don't have any, you see. There is no interchange zone on one time frame lower, so we wouldn't be able to trade that set and forget. Make sense? So several easy candles, we are expecting the move to the origin, retracement to the origin of the move. Troy saying, I just started using the alarm feature and it does wonders. Why didn't I use that before? Well, Now you know it's good, but don't start putting alerts and alarms everywhere because that's also counterproductive. You will be looking at the charts too often, Troy. Okay, good. So as per this analysis, okay, we are waiting. We shouldn't be going looking to go well. The areas of demand are playing out on the daily. It's very aggressive already. Okay, but as you can see now, strong rally, strong rally, strong rally. Now losing steam, losing steam, losing steam, and it could probably start doing that anytime soon. Okay, good. So one more. I'm gonna finish. Which one? Any suggestion? Which one to look? I've got a few here, but if you don't tell me one, I'm gonna analyze one of them randomly, and we'll finish the webinar. CMG as a stock. Chipotle. Oh wow, I love this sauce. Chipotle. Wow. Oh my God. Good. So that's another example. Look at that. I mean, this is crazy. I mean, uh, now let me ask you, how many people do you think that look at the 6-month chart? How many people do you think? I guess you know traders, trading, okay, all kind of assets. Which is the highest time frame? What is the highest time frame that you think the average trader is watching? Anybody? Okay. What do you think the highest time frame the average trader is looking at? Or just tell me the one that you're looking at. Okay, monthly, daily, monthly, daily, 4 hour, daily, 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 Frederick daily, Jay daily, Danny Pimentel daily. So imagine, what do you think? If you, I mean, if you, probably they won't even know there is a 6-month chart. And most trading platforms do not allow, do not have the 6 months and 3-month charts. It doesn't exist to them. So that's an edge that we have. And again, the rules are playing out so nicely. I just do not cease to be amazed. What do the rules tell about this? Pier Paolo, Troy, Daniel, Jay, Brian, Frederick, Miroslav, etc. All the guys here, O'Neill. What do the rules say? Very strong demand. And after a strong impulse made of 3 ESC candles, what do they say? We are expecting what? Retracement to where? Frederick? To the origin of the move. Do we have a strong area of demand on the 6-month chart? On Chipotle? I remember this one we were looking at Chipotle on the, I think it was on the first or second Tenerife meetup. And I think Miroslav was there, or I don't know which one, but it was, I remember the one from the US was there. I don't know who he was. And we were talking about Chipotle going, thinking of going long with new demand area was what created of this area of demand. So 6 months area of demand. If we look at the 12 months area of demand, 12 months, what do we have, my friend? Here, also a 12 months area of demand. So 12 months in an uptrend, long bias, demand in control. So the 3 months area of demand, the 12 months is made, sequence is made of 12 months, 6 months, 3 months. Long, set and forget, at 3 months area of demand, isn't it? So we have already that. 3 months longs at 3 months area of demand, okay? Now, if we go to the 12 months, 6-month chart, we have the 6 months area of demand. Is in an uptrend, longs at 6 months area of demand, isn't it? So we have 12 months, 6 months in an uptrend, longs at 6 months and 3 months area of demand, isn't it? All that good? Now we go to the 3 months chart. 3 months area of demand. Oh, let me do this, one sec. I'm going to use this. I'm going to use these lines to cover and encompass the 6 months and 3 months, 6 months area of demand. So we have 3 months, 6 months area of demand in control. 12 months. Come on. Plus 6 months demand in control. And uptrending, isn't it? Good. Uptrending. So did we have, in the 12-month sequence, we said that the 3 months is the anti-time frame, isn't it? 12-month sequence, that we have the sequence is 12 months, 6 months, 3 months. The 3 months is the anti-time frame. Did we have a strong high score 3 months area of demand on the 3 months time frame? Yes or no? Yes, everybody, yes, yes. And where is it? It's so conspicuous. I mean, it stands out, my friend. Isn't it, Venu? Great. I mean, this is the kind of set and forget trading that I'm always referring to. This is awesome. All the retailers and small investors will be thinking of what when price is there? Going short. Why? Because all the news are bad for Chipotle. They are not selling. All the earnings are not good. The last 2 quarters are being not they have not been producing or selling as much as expected. Blah blah blah. So people keep on selling, and those sell orders are filling the buy orders from big institutional traders, and that's why this is going on. So, what do we have now? 3 months wow loan of 3 months, 6 months, and 12 months areas of demand. The 3 months area of demand there, okay, is the confirmation type of trade on the 12-month sequence, because the 3 months chart is the confirmation, the lower time frame in the 12-month sequence, isn't it? Price is fractal. We are talking about the fractality of price. Make sense? Yes? Good. So it all depends on the sequence. That's why I always say, choose your sequence and stick to it. And if you want to trade 2 sequences or 3 sequences, okay, what would you do? I'm going to tell you what you should do, but what do you think you should be doing if you want to trade more than 1 sequence at the same time, in order not to fuck things up? I'm sorry for the word. What you should do in order, what you should do? No, you want to exactly copy set that, separate account, separated accounts. If you want to trade the 3-month sequence with the weekly time frame, open a trading account only devoted to trading 3-month sequences. If you want to trade the monthly sequence, open a brand new account with another, allocate some more money to that account to exclusively trade the monthly sequence. But do never ever trade the 3 months or monthly and weekly sequences on the same account, because you are going to lose money. Always. Okay, always, because you won't be able to discern or separate them, and you won't have this result. You won't learn if you are good at the 3-month sequence, or how the trades on the monthly sequence are playing out versus the one of the weekly sequence or the 3-month sequence. Open a trading account on for 3 months, another for the monthly, 2 accounts, 3 accounts, whatever you want. Okay, but separate them. Okay, so we have that on 3 months chart. So let's take a look at the monthly chart. Okay, good. Now we are having a monthly area of demand, okay, created as confirmation, which is also nested at a 3 month, 6 month, 12-month chart, isn't it? We have that one over there as well. This was a supply zone, and it was eliminated. But what happened here? Supply zone, after there was a trend line break there, okay. Well, base, no, it would have been very tricky there, but it would have removed nothing there, but there. So supply eliminated, but what happened there? What can you tell me about this? No consolidation away again. So even though this bullish impulse was responsible for eliminating that, it didn't consolidate away. So, and it was, even if it did, it didn't even create 2 ESC candles, 1 ESC candle. This is not an ESC candle. Okay, so trading would have been possible down there. Okay? All-time highs, yes. Troy. So price continues to rally. Okay? And now this is a tricky price action, but we have a rally, drop, isn't it? There we have it. Another area of demand. Make sense, everyone? So now, don't we have this trend line? Don't we have these supply zone? So what do we have here, my friend? My friends? All-time highs. Anyway, yes, Brian. It doesn't matter. If this was not supply, all-time highs, bullish impulse, 2 to 1 consolidation away, this area of imbalance is confirmed. So we have monthly uptrend, monthly demand created, 3 ESC candles, longs down there. It might take months to retrace, but if it does, maybe it will retrace when monthly center of alignment. We don't know. Okay, but look what happened if we traded the 3-month, 6-month charts. It took 2 years to retrace. Well, there are thousands of stocks. You just place your alert, and that's it. On the way down, if you had another account for trading the monthly sequence, then you would have the monthly sequence. Monthly in a downtrend, blah, blah, blah. Okay, show bias. Then when it reaches the 6-month sequence, okay, let's go to the 3-month sequence account. And then you trade the 6-month sequence. Make sense? All good? Exactly. If you wouldn't, Frederick, if you didn't take the center forget long, you would never be in the trade, even with confirmation. Exactly. That's the thing with confirmation. Confirmation is a sword with 2 edges. I mean, if you wait for confirmation because you are not sure about the level, or you don't have enough capital, or you missed it, then you might not take the trade. You might miss the trade. That's the problem with the confirmation. If the set and forget approach is even it's better, because once it reaches the level, you're allowed to go long. Double-edged sword. Exactly. Thank you for correcting me, Troy. Okay. So, and if you are don't know about options, that would encourage you to learn about options, because what would you think if you traded without stop loss? You don't need a stop loss. So if price reaches that area of demand down there on the 6-month chart, let me clean that up, or the 6 or 3 months and all that, or even the monthly. Let's take a look at the monthly. Imagine price reaches that area of demand. You don't need, okay? You don't need to, okay, in options you don't say, okay, I'm going to buy here and the stop loss there. No, it doesn't work like that. You buy time. So the more time you have, the more time you have to buy, the more time you have for price to rally in your direction. So imagine this. You buy an option that is 3-4 months out in time. Expires in 3 months. So you have, if price reaches the monthly every month, you have 3 months for price to give you the profit. Imagine this. First month price drops and overshoots the level down there. If you bought the underlying stock, what would you have? You buy the underlying stock. You buy. Imagine this is Forex. You lose. In options, you don't. You don't lose. Why? Because you didn't buy the underlying. You bought time. So you have 1 month. Imagine price reaches that area. Let's do this. Price consolidates away. Already did. Slow approach, which is good. Okay? And then price hits the monthly area of demand. And then you buy here. Okay? And you risk 1% by buying the underlying stock. 25% the padding over there. Price keeps on dropping. You lose. So imagine there's a pink candle there. You lose. But you bought there only 1 month of time. Make sense? So far, so good? Because I know many of you don't know about options. Okay? So what happens now? You have bought, imagine, 4 or 5 months of time. On a monthly chart, don't forget, you have to buy more than 3 months. So 1 month already. Then next month we get this. On the next month we get, let me do this. we get this candlestick. Come on, okay. We get this candlestick. We get this. What kind of candlestick is this? Get that. What price action is that? That's a bullish pink candle hammer. Could be a fail ERC if, come on, I just deleted, I mean, just clean. Okay, so we had that. Sometimes this is just crazy, come on. I mean, we have that, blah, 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 and then you overshot, okay, and then we have this pink candle, okay? So 1 month, 2 months. Then the next month, you get an ERC candle, 3 months, and then 4 months. Even if price went below your entry, which was there, and the stop loss would have been good if you had bought the underlying stock, you would still be on the trade and you would be making money. But if you buy the underlying stock or you buy the CFD, then you lose 1 hour. But if you buy option, you buy time, you don't buy the underlying stock, you buy time. So you have still months of time. Obviously, if you buy lower short-term options, weeklies and all that, then you will lose because you only buy 1 week of time, 1 month of time, you lose, obviously. But you buy long-term options on long-term areas of imbalance, the probabilities are much higher. So you could be trading without stop loss, but that is not a sin. Trading and as stocks or forex without stop loss is forbidden because you could lose, you could blow your entire account in 1 single trade. But with options, if buying an option on CME costs you, it's expensive because it's $700. So it could cost you maybe $12,000, $2,000, something like that. But imagine this is a stock trading at $40, $50, and all that. An option could be like worth $200 or $300, $400, and all that. So you are risking that. Okay, only that. If you want to buy the underlying stock here, you could be buying, imagine a half of the level at about 670. Okay, and the stop loss should be at 620. So it would be $50 of risk. That's too much risk, okay? So it would be $50 per share. It would be $5,000 risk versus the if you buy the option, it will be much, much, much smaller. And if price drops below that level, you would lose $5,000 or even more if it gaps down with a bad earnings report, okay? But if you buy option, it doesn't matter if price drops to 0. If your risk is $500, then you lose $500. That's all you lose. Okay? And that's everything for today's webinar. It's been almost 2 hours. Hopefully I answer many of your questions, and as you will see if you review this webinar over and over, we are always talking about same thing: consolidation away, strong impulses, location, context, and trend. Critical. But obviously if you focus on a small basket of assets on Forex, 10, 20 volatile liquid Forex cross pairs, then you will be sort of forced to trade in the lower time frames, obviously. But you can trade stocks with CFDs, options, usually about options. There are so many assets. But this is the kind of levels we want to trade. That's the ones we want, and the ones we saw on the 3 months and all that. So enjoy the rest of the day and night, wherever you are in the world. Thanks a lot. I will be uploading the webinar if it was recorded properly. Hopefully the technology will be on my side. Good night, everyone. Bye-bye.